This is the current federal tax developments for the week of May the 13th, 2019. Current federal tax developments are brought to you by your state society of CPAs and by Kaplan Financial Education. This week, it's been a very interesting week if you happen to be a CPA firm that has been using products from Wolters Kluwer. And obviously, we're going to talk this week about what happened there. And it's actually of interest even if you're on another provider system. We're going to talk about some of what happened, the and then some of what our takeaways may be. General Accounting Office, basically General Accountability Office, I was going to get that wrong, came up. The GAO issued a report whose timing was virtually perfect coming out on Thursday, that looked at issues regarding the security of third parties in the tax arena. Third parties being tax professionals, tax preparers in the e-file program, tax preparers generally, and looking at software providers. Given what happened this week, that's a interesting timing for that to come out. We'll talk about those findings. Then we'll get to kind of standard update stuff. We're going to talk about the maximum vehicle values that the IRS updated this week for cents per value and FAVR methods. We're going to talk about the IRS clarified an issue relating to amounts paid out to liquidate shares in a corporation that had been an S corporation previously, and the impact of that if it's a distribution that's deemed to be a dividend that is treated as a redemption. Question becomes, how does that impact AAA if we're in one of the post-termination transition periods? We also take a look at a question that arises for those of you in Connecticut, at least have clients in Connecticut, who have paid the Connecticut gift tax and are subject to the Connecticut estate tax, and how those interact when computing the deduction for state estate taxes, death taxes, I guess we should say, since both state inheritance and estate taxes on the federal return. And we'll discover that, not surprisingly, my boss ordered me to do it, doesn't help you in terms of a trust fund penalty. But in this case, the boss was a little unique. The boss happened to be an agent of a federal agency that it was claimed told them they had to pay other vendors before they paid for payroll taxes. So we'll take a look at how the 11th Circuit dealt with that. Well, this is a week I actually do my first 8-hour CPE course of the year. I was in Atlanta doing sessions for the conference there, for the Decision Makers Conference in Atlanta a couple weeks ago. But this week I'll do my first session, which is actually an ANA session. That'll be interesting and fun too. It'll be a 2019 FASB and AICPA update. We'll look at the developments in the accounting industry. We'll look at what FASB's been up to, or to a certain extent, not really been up to majorly, but we'll talk about what's happening. Implementation issues, AICPA developments. We'll take a look at accounting in general and things that are coming up in the industry. That's going to be 8 hours in Beaverton. It will be coming up on Thursday. For those of you who are in ANA that may prefer a longer version, I will let you know that Walter Haig will be doing 2 days before the day I present. So if you want a 16-hour update on everything accounting-wise, that's coming up. I have the shorter version on Thursday. So I'll be presenting, but it's kind of accounting week at the Oregon Society offices in Beaverton this week. So I'll see you guys up there. Well, let's dive into what's been dominating. If you are a person who is using services from Wolters Kluwer in your tax practice, you know this has been an interesting week. The citation I'll give for this, because we always give some sort of citation, and I'm going to refer you, because I think a good starting point for understanding how this got rolling is an article posted on Brian Krebs' site entitled "What's Behind the Wolters Kluwer Tax Outage." It was on his Krebs on Security site, posted May 7th of 2019. And that article goes into some details about, actually kind of is the one place I think you're going to find the whole story of how this all starts rolling. What's happening is, or at least an incident that occurred before everybody else is aware it started rolling, may or may not have an impact on this, but obviously we'll talk about what happened. And so we're going to kind of go with this. Now, I debated when I was thinking about talking about this, do I cover this chronologically based on the events in order that they happened, or do I cover it in the order that most of us discovered events that had happened? And I decided we do it straight chronologically to kind of understand what went on. On Friday, May 3rd, Brian Krebs basically reached out to Wolters Kluwer's in the Netherlands, where headquarters is, and had disclosed to them that he had discovered that there were some open directories available on the internet. In fact, if you go to his website and you follow this story, you'll see from the Wayback Machine, a capture of an open directory of ATX software. And it was software available for download, used by that system for download. ATX is one of the tax programs, obviously, that CCH has. Apparently, there were a number of such directories that were open. And Brian reported that he also found in one of them some sort of references to a discussion forum in Russian language. And he also found some PHP code that didn't appear to be anything related to what should be there in a program directory for users of that software to download. It did not appear to be Wolters Kluwer's code. So that was turned into Wolters Kluwer's on the 3rd. Brian reports that those directories were shut down. Brian, because he runs a security blog, asked Wolters Kluwer's to get back to him, with some information about, how long had this been open? Was there anything? He noted that he saw no evidence that there was any client data exposed. He didn't see anything like that. He got to the programs, though. And so, there were those questions. How long had it been writable? And those sorts of things. And he was told that they would get back to him. This was on Friday. The weekend goes on. Monday morning, this is when most of us come into the story. Early on Monday morning, depending upon what you were doing, how it goes, but, Wolters Kluwer's eventually gave us a timeline of sorts. And somewhere between 8 a.m. Eastern and 10 a.m. Eastern on Monday the 6th, Wolters Kluwer's discovered there was malware in their network. Now, we haven't been told the nature of this malware, but we've been told it was there. They also were told, basically, to shut down all systems. All systems were pulled offline immediately. And man, when they said all, they meant all. Their phone system went off too. I mean, everything went offline instantaneously. If you tried to contact them, if you tried to call them, you couldn't get them. Emails bounced back. If you tried to go to the website, you'd get it was unreachable. The only website that I found that was reachable, which was kind of interesting, was the eFile website. And that wasn't really reachable on Wolters Kluwer's end. What you got was a security company they work with, which I suspect, runs a front end that helps to ensure that people don't get in there to play around. They had kind of stepped up and had a maintenance sign, but that was the only place you actually got any sort of contact. And it was clear it was from them. So we had this particular problem. Now, what happened during that day was kind of interesting. Obviously, initially you say, hey, okay, so when this happens, we're a Pro FX shop, it's a Pro System FX shop, and we discovered early that morning that for whatever reason, we couldn't upload to the e-file system. Well, sometimes it dies. It's not often, but every so often it goes down. It's up in an hour or two later, so you make no big deal of it initially. Others may have noticed, as we eventually did, that you also couldn't get authorizations from CCH. If you had run out of the authorizations you had banked for some type of return, that wasn't working. Various things were happening, and people also had been told to expect a software update over the weekend. So if they went to try to download the software update, that also wasn't available. Everything was dead. Well, this goes on for the day, and obviously, nobody knows, there's no communication right away. I think largely because Wolters Kluwer's email was dead too in the middle of all of this, all of the stuff that had all the customer listing. So basically we go on for the day. A thread begins developing on our sysadmin on Reddit, where we begin to discuss this. Some people claiming to be Wolters Kluwer's employees or who were posting and said they had, relationships or they knew of Wolters Kluwer's employees, posted on a thread on that, and it's a thread for systems administrators, an organization on Reddit, subreddit there that deals with system admins. And so while Reddit has all kinds of weird and wild groups, this is a pretty, what most considered a rather boring, shall we say, technical group that's very specialized. But they began posting reports that they had been told there was malware in the network and that everybody had been ordered to basically shut everything down now. I mean, now means like reach and grab plugs now. And that was where they stood. And then everybody who was not in IT was effectively told to go home. Now, those posts were deleted by the users sometime after they posted. Most of them were. Of course, the problem is on the internet, nothing ever becomes impermanent. There are sites that actually log everything that goes into a Reddit group, so you can actually find things that were later deleted. Just like there are places that log Twitter's streams so that you can't really, go back later and delete it. You can still prove it was there. And, other members of this group began looking at the data. Speculation began to develop. And by the end of the day, we knew they were down. And the reports on there, the malware report was there. There was speculation because a major new version or type of cryptojacking software had been hitting organizations. Actually appears to have hit the city of Baltimore this week. So by the end of the day, there was kind of a rough, let's say consensus there that while nobody knew what was happening for sure, that what we'd seen so far was consistent with a crypto malware, that was going to be looking for ransomware on their systems. Well, that evening, suddenly, we did get some statements from Wolters Kluwer began to come out. The first ones came out on their Facebook account. That one simply said that they had had a network issue, that had caused all systems to go down, that they had taken all systems offline due to that network issue, and they were working to correct it. That was at 10 p.m. Eastern time, Monday night. 12 hours later, they posted an update that said not much more, except they said, they said all the same things. They said, and and we have no evidence that user information has been revealed. And that was the first clue we had that this, the first official clue we had that this was not just a hardware problem. It wasn't like power had been cut somewhere or whatever. It was a major, it probably was something got in the system. Later that day, they updated the statement. And so beyond saying they had no known data disclosure, now they said, by the way, they conceded it was malware. Yes, malware, they discovered malware. That was noted. And they also added a line saying there was no known infection of users off their systems. Now, that was more interesting. That was kind of like, wait, what do you mean? Around that time, that's when Brian Krebs' article went up on the web. And that was when we discovered that open directory problem, which kind of explains why they probably wanted to say that, we haven't had any infection, because that's going to be obviously a concern. Did somebody get into the binaries? And were they therefore getting people to download binary programs onto their systems for software installation that were compromised? And so that was a concern. Okay, we continue on. So at this point, we kind of know that much. And from the standpoint of what happened at Wolters Kluwer, that's really what we know at the moment as I record this today. Wednesday, they did finally begin to be able to restore things. Now, this is a big deal, because if you were not, let's say, a ProFX customer, but you were an Access customer, you lost the ability to do anything. All the products you licensed went dead because Access is a hosted service, and this took everything down. It also took down, again, ProFX took down anything we had to go online for. That would be the same thing for ATX customers. It took down the CCH hosted websites that many firms have, their file sharing. Lots of things got involved, and other Wolters Kluwer divisions were involved as well. On Wednesday, we began to get things back. The first thing to kind of come back was Access, but with a lot of limitations. But Access users at least got it. And what really happened, to be totally honest, is they got Access up to the status that ProFX users were at, which means you could, all the things that right now that needed to be up on the hosted system were up, but all the stuff that like the ProFX users would go online to get was still non-functional, e-filing and those sorts of things. On Thursday, we did get e-file back. So electronic filing came back for everybody on Thursday. Global FX also came back up somewhat on Thursday. Really didn't complete that till Friday. When I left the office on Friday, there were still some systems impacted. The last time we checked in my office, and we do close at noon on Friday, but the last time we checked at my office, we, basically could not get authorizations, and CCH had not yet released the software update that, that they had actually started to release on Sunday. And I have a feeling that may take a while to get back as they double and triple check things there. The reaction, as you may guess, has not been, has been kind of a bunch of panic, etc. Thing to know right now, we're not going to know a whole lot more, most likely, about what went on here until they complete the investigation. And these are not easy to investigate. They are very difficult to investigate. It's going to take some work. We do know from Wolters Kluwer's statement on Friday that law enforcement is now involved in the process. They're looking at what happened, that side of the equation. Also on late Friday night, Wolters Kluwer sent out an email. Now, this has been a problem because their email system's been impacted. I say that because we're not getting our emails anymore through the same service that we got in the past, the same place in the past that emails came to me when things were updated. Usually came to my email address, my current one. What's happening now for our firm is we've gotten these email updates, but they've gone to my partner on an email address that's actually one that he doesn't really use anymore, but it forwards to his mailbox. We change, firm names change as partners change. And so the address they have is one that was last used probably about 10 years ago, a former name of the firm, when the firm's name was Henricks, Martin, Thomas, and Zollers. And so HMTZ CPAS was our domain at that point. So it's going to that old address, which is 2 names back. So basically it's one of those things, and it also got classified as spam because the email system, considered that to be kind of we don't know why. This is probably advertising. So we fished it out of there. We've got it. So a lot of people have not seen notices. One big notice came out late Friday. About 7 p.m. Mountain Time. I discovered it. I discovered it posted on Twitter by somebody, and I've confirmed it with other locations. Other people have received this email. The IRS, apparently, Wolters Kluwer has been talking with the IRS. The IRS has, is going to offer a limited amount of break for things that have a May 15th deadline for, if they were impacted by this shutdown. They are going to give 1 week extra time, but there's going to be specific procedures you must follow to get this done. It will impact the 990s, 1120s, and 1065s. The Wolters Kluwer says they will send out information about the specific procedures on Monday. My guess is the IRS and them are there still working out how it's going to work. And then what's going to happen, they said they are talking with state taxing agencies about relief for this. So we have the complete coverage of this on the website, currentfederaltaxdevelopments.com. I am posting updates there as items become available. If you're having trouble getting the emails, as I become aware of emailed information going out, I'm trying to post it there so that you can follow it there. Go to the website there, go to the story that's tied to this article, and you should be able to keep up with what's happening. We've got the information there about this proposed extension. If other information becomes available, I will post it there. Now, talking about perfect timing. The GAO sent out a report. IRS needs to improve oversight of third-party cybersecurity practices. You'd almost think like, wow, they wrote that quick. It was issued on May 9th of this year. It is GAO report, GAO 19340. And basically it takes a look at this. The GAO, and by the way, no, this was not rushed out. This was going to come out this week. It's total coincidence that the Wolters Kluwer's incident occurred just before this came out, but it is going to probably put a lot more attention on this report. The GAO found that the current supervision of e-file providers and software developers is inadequate, that the IRS's standards for those who are not online providers, and by that we mean people like, the TurboTax and the H&R Block, whatever their tax thing is online, the people who right now are in hot water over the e-file issue that's in Congress, that group, the people aren't that group, which would mean those of us who prepare returns and providers and the software providers we use, like Wolters Kluwer's Intuit. Well, Intuit's on the other thing too, and Thomson Reuters. Those guys, that there's inadequate supervision, that the IRS rules that they impose on them pays attention mainly to physical security and ignores cybersecurity issues. The IRS responded to this and all the recommendations by saying for most of them, they lack authority. The IRS position is they said they can't impose these rules. In fact, they point to the losses they've had in the DC Circuit regarding their ability to regulate tax preparers, saying that they are not granted any such authority. And the IRS effectively says, and I think very likely correctly, if they put out such regulations, they'd end up in court and they'd be struck down. So they're saying, Congress would have to give us authority. It's not there. But the GAO's criticisms are probably going to come back, though, and splash back on the industry, especially if a problem develops. And hey, guess what happened this week? A problem developed. Did you have adequate security in place? And the GAO report also points out something that's really important that I think a lot of people have not paid attention to. Every tax preparer, which includes CPA firms, guys, is subject to the FTC safeguards rule. It is a condition of being in the e-file program. The IRS revenue procedure in this area makes it a condition of complying with that. The safeguards rule requires, and this is where people may get a little nervous. Under the safeguards rule, you're required to have a written, yes, I did say written, a written program, essentially for information security. This is under 16 CFR Regulation Section 314-3. It tells us you shall develop, implement, maintain a comprehensive information security program that is written in one or more readily accessible parts and, contains various items. Specifically, you're supposed to address the elements of the system found in Regulation 314-4. And that includes requirements that you designate an employee to coordinate your security program. You have to specifically think about and identify foreseeable internal and external risk and security, confidentiality and integrity of information that could result in unauthorized disclosure, misuse, alteration, destruction, or other compromising information, and assess these safeguards in this risk. At a minimum, this assessment should include consideration of risk relevant area of your operations, including employee training and management of employees, and information systems, including network and software design, as well as information processing, storage, transmission, and disposal, and what your systems do for detecting, preventing, and responding to attacks, intrusions, or other systems failures. You need to design and implement safeguards to control risk identified through risk assessment and regularly test those things, right? Or otherwise monitor their effectiveness. And you have to oversee service providers. Can you say Wolters Kluwer's? By taking reasonable steps to select and retain those providers that are capable of maintaining appropriate safeguards for the customer data at issue, require your service providers by contract to implement and maintain such safeguards. And then finally, evaluate and adjust your security program in light of the results of the testing and monitoring required. Any materials change in operation, business arrangement, or any other circumstance you know or have reason to know may have material impact on your security program. Technically, everybody listening to this probably is supposed to have that program in place in their organization. Now, the key question you got to ask yourself is, do you? Because the problem is, if something goes wrong, like I said, this week, you may be asked by somebody to produce that, what exactly is your program? And specifically, if we're going to talk about like the Wolters Kluwer situation, did you take those steps to properly oversee them? For instance, most of you should be aware, hopefully, that Wolters Kluwer does have a SOC 2 report for the access system. The question is going to be, did you review that SOC 2 report? By the way, yes, you can get it from Wolters Kluwer. They'll give it to you. Did you review it? And if you're wondering what a SOC 2 report is, and everybody in your organization is wondering what a SOC 2 report is, the big danger for you is that that's a report prepared by CPAs that reports on on management's assertion, that is Wolters Kluwer's assertion, that they have these procedures in place to protect data and some rulings on the efficacy of the same. Did you review that? We don't know for sure what happened at Wolters Kluwer's, but the question is going to be, was it adequate? Did it serve? Again, there's no evidence that things have leaked there. Be very clear about this. We don't have evidence. In fact, I'm going to say the biggest danger we have in security is overconfidence, is the belief that nothing could ever get in. If you believe you're totally isolated from this, you're in deep trouble. You have to understand your systems have to take into account what happens if, despite your best efforts, things get in the system. Now, Wolters Kluwer is telling us right now that what they did, because they found that, was they took the extreme step of yanking the cords on everything to stop any potential damage. Now, if we discover that was in fact exactly what happened, that there was no delay, etc., then yeah, this may be the perfect situation. There have been intrusions that have not created security problems. Those of you that use LastPass, you may remember that there was an intrusion, that LastPass noticed weird things happening at night on a particular machine that shouldn't have been happening. But because of how their systems were designed, specifically, as long as you had a complex password as your LastPass password, realistically, they weren't getting in. They could never read your passwords. So, the system was designed allowing you to keep full control and presumably making it very difficult for somebody, if they got in, to do anything useful. And they caught it early, but those things are going to happen. So again, this is something to be aware of. There's going to be questions this week, especially if this hits the general news group, it's like, the general media. Don't be surprised if you start getting questions of, do you use these guys? And then secondly, if you do use these guys, why did you use them? How'd you do this? So we go down that. Let's talk about our standard weekly updates now. And I realize we're going to run long, but it's the nature of this week with all that happening. Under standard tax updates, we have a few things this week of interest. The IRS issued Notice 2019-34, issued on May 8th. Following the Tax Cuts and Jobs Act, Notice 2019-08 was issued by the IRS. This is the maximum value of vehicles where a taxpayer can make use of the cents per mile method for valuing what goes in the employee's W-2, or make use of FAVR programs. And the IRS said, in the past, those numbers were relatively low, right? They were well below $20,000 for the maximum value of a vehicle that could be used. Well, since TCJA has pushed up, and made them all eligible for bonus depreciation, the IRS decided that really those numbers should be higher. And they said they wanted to change the regulations. It took them forever to put out the 18 number. In fact, the 18's numbers didn't get put out until in 19. So 2019-08 told us the 18 limits. They have now, it is May, so it's earlier this year, they've told us the 19 numbers. Those numbers for both programs will be $50,400. They also repeated what they put in Notice 2019-08, that if you had a program for employees of providing cars, and you hadn't been using this method on certain vehicles, because in 18, when you gave them the car, or earlier, I should say in 17 or 16, whenever you gave them the car, the vehicle was too expensive, and now it wouldn't have been initially too expensive. There's ways you can get that back in the program and start using those on those automobiles. They talk about this. They also asked for comments on the regulations to change this to make these higher numbers at least, permanent, shall we say, right? As a permanent part of the code, how can we leave them there? So again, we're going to talk, that's something coming up to watch. We also have the IRS issuing Revenue Ruling 2019-13 on May the 9th. And this is one of those things you got to be a real tax geek to get excited about this. Here's what it is. You have a corporation that used to be an S corporation that now terminates its S status. Either did so voluntarily, it did it voluntarily, or it just got it killed because we got a shareholder couldn't be an S shareholder. We end up with a set class of stock, whatever reason, we end up losing our status. There's what's called a post-termination transition period during which we can make distributions and treat those distributions of coming out of AAA. And also means they reduce the basis of the shareholder shares, but they do not, because they're not taxable income unless they run out of basis, and then it'd be gain. Well, here's the catch. What happens if we do a redemption of stock, but under the provisions applicable to redemptions, it is deemed to be a dividend and taxed under Section 301. So let's say we have one person S Corp on the entire S Corp. I end up, I have 1,000 shares, and for whatever reason, I redeem 500 of my shares. Now, as you all know, I'm still going to be 100% control of this S Corp, right? So generally, the corporate taxation rules tell us that that's a dividend, right? Tax is a dividend. Well, here's the problem. Does that override? Tax as a dividend means that it's not considered a distribution during the post-termination transition period? Or does the post-termination transition period rule override that and say, no, that comes out of AAA? Well, this ruling clarifies that, yeah, even though it's kind of a deemed dividend, it's still treated as a distribution and comes first out of AAA. If we exhaust AAA by that redemption, then we, by that redemption that's not a tax redemption, that's treated as a dividend, then the remaining amount comes out, it reduces basis, and any remainder after we've exhausted AAA goes against earnings and profits. Okay. So as I say, not something you'll hit often, and something you got to, like, as I said in tongue in cheek on Twitter, if you read the question at the start of this, if you understand the question they asked, you're way too deeply involved in taxes regularly. Just going to say, read the question and tell me that your clients would not look at that and go, I have no idea what they just asked. And that many of your staff members would say, I have no idea what that said. Yeah, if you're deep in S's, yeah, you kind of understand what it means. We also have a special program manager technical advice that was issued this week on May 8th. If you have clients in Connecticut, this is somewhat important. If not, well, if any other state adopts something like this, then it's important. The question was asked, how does the Connecticut gift tax impact the deduction for Connecticut estate tax? The Connecticut gift tax, Connecticut has, which is a little weird for states. Most state death tax structures don't have this duality, but Connecticut does. Connecticut, like the feds, have a gift tax and a estate tax. We also have a special rule that if you die, gift taxes that were paid in the 3 years prior, in the prior 3 years before the year you died, those are added back to your Connecticut taxable estate. Now, remember, these are state gift taxes. There is nothing in the federal estate tax rules that say we add back state gift taxes paid in the prior 3 years. There is a similar rule about the federal taxes, but not the state ones. So the question becomes, on the Connecticut estate tax return, we pay taxes, and some of those taxes are going to be on this gift tax that was added back. Does that impact our deduction under 2058 for estate taxes, for state death taxes? Because that does have a factor that says it's limited to items that are includable, taxes on items includable in the federal estate. And this actually goes into detail because there are some nuances here about what gets added back. And they know, well, the gift itself adding back is no problem, is in the mix, and that's normal. And the gift tax for year of death is actually considered part of the Connecticut state tax. And so they go through a lot of technicalities, but the basic rule here is you have to allocate the Connecticut estate tax paid. So because you will not get deduction for the portion that's allocable to gift taxes paid to the state of Connecticut in the prior 3 years. Because it's not including the federal taxable estate, there's no deduction allowed. So again, if you deal with Connecticut decedents, this is important. If you're like me here in Arizona, Don't have a whole lot of Connecticut decedents, so probably not a big deal for you. Finally, this is an interesting trust fund case. We haven't had the trust fund case for a while. This is the case of Myers versus United States. It comes from the 11th Circuit Court of Appeals. It's case number 18-11403. It was released on May the 6th, 2019. And this is a case of a person who was a CFO and otherwise in management of a couple of companies. The company's parent company had been placed in receivership by the Small Business Administration, and that receivership extended over these companies. Okay, so they were sitting in SBC receivership. They had an SBC receiver. Now, as you might guess, why is it we're in SBC receivership? Well, because we're kind of financially challenged at this point. Small Business Administration is, I should say SBA, not SBC. The Small Business Administration is, looking at having to deal with this problem of debt. And the CFO is, basically they've got this receiver. And the CFO says the receiver told the CFO to pay these other debts rather than trust fund taxes, because if you paid the trust fund taxes, for instance, as quite often would happen in a case like this, you're going to, you're probably not going to pay somebody who's going to cut you off entirely, and that's going to cause the whole thing to shut down. And from the viewpoint of the receiver, that's going to put your debts at risk. The IRS, the government agencies will take longer to react. So we got a better chance of getting out of this thing if you pay these other guys first, and we'll figure out where we go. Well, he unfortunately took that advice. Now, the catch was, obviously, the IRS discovers a problem. The IRS discovers the taxes aren't paid. Ultimately, the taxes were not paid by this organization. Now they're going after the CFO for the taxes. The CFO says, wait. That's, this is just wildly unfair. You are the federal government. The receiver was an agent of a federal government agency that told me not to pay the federal government. Why should the federal government now be able to say that they can get the money from me when I was just following orders of the federal government? Well, the 11th Circuit said, in the official majority opinion of the panel, it made no difference. The rules are identical. If you have the ability to pay a vendor and you don't, then, and they're unpaid trust fund taxes, you are liable personally if those taxes are not paid. And realistically, that gets down to the point we've often said, if you're faced with this order and you're a controller and you're faced with this order, you're a CFO, your real thing you need to do is quit. Yeah, I know that's easier said than done, but if you go forward, then you're going to personally be liable for the taxes. A concurring opinion agreed in this case that should be the result, but did not agree with the broad holding of the panel that this would apply in every case where a government-associated party told you to skip paying the IRS. The concurrence said in this case it would, because under the rules applicable to the SBA and receivership from the SBA, that they basically have the same responsibilities and requirements for complying with laws that the old owners had. So bottom line, they have no authority to tell you to do that. And because of that, yeah, they're going to fire you. And yeah, that guy, if it had not been in receivership and this been just, the majority shareholder, let's say the 100% shareholder, CEO of the company that ordered you to do it, you'd be fired if you didn't. That's fine. You lose your job. The problem I have with the concurrence, I understand I kind of like the concurrence in one sense, but the other was it meant that this guy's being hung because he didn't have a detailed knowledge of regulations deep inside the Code of Federal Regulations that dealt with what happens in a Small Business Administration receivership. And it's like, it's not a whole lot of benefit to figure out if you do or don't, if it's okay to keep your job or not. Reality is, if you don't pay trust fund taxes, kind of suspect it won't be okay to keep your job. I'm just going to tell you that. Again, it's time to get started registering for CPE for 2019. We have courses up and available. As I said, I'm going to be speaking in Phoenix in the coming months. I'm actually going to be, by the way, a week from Tuesday, I will be presenting for the, I'll be presenting a session for a chapter. I think let's see, the Somerset Middlesex chapter of the New Jersey Society of CPAs. I'll be doing an update, 2 hours there on, it'll be related to non-qualified options, restricted stock, other deferred comp. We'll look at both the income tax, payroll tax aspects of the same. There'll be another 2 hours on the program devoted to R&D issues from a group that does R&D there. So if you're there in that area, come by and see me. I'll be speaking here in Arizona in June. I'll also be speaking in New Jersey at, I think it's going to be at the Wilshire Grand this time, because society's in the process of moving. So I suspect at that time I'm going to be in the Wilshire Grand because, they're moving things from old office to new office, expecting a new office July 1st. So I'll be at the Wilshire Grand, which basically isn't far from their offices. But I'll be presenting their issues for them on the relations of multi-state taxation. We'll talk some there about the Kastner Trust case, what it might have. It's a business course, multi-state taxation of businesses. I think the Kastner Trust case and Fielding will give us some ideas maybe about where the court's going when they start trying to apply what they did in Wayfair to other states. So I think it's going to be an important thing to discuss there. And we got a bunch of other states there, so I'll be going various places in the country this year. So if I see you, that's great. I'll be in the various locations. I'm going to be in Connecticut also there doing advanced partnerships in June. We'll be around doing various things as we go on. I'll be going, I think I go back to New Jersey later in the year to do sessions. I'll also be doing sessions in Idaho this year. I know, like I said, Oregon already. I know those are in play. So I'll be in various locations, various states, various places I go. So hopefully we'll see at one of the conferences we do every year. So, sign up now. Take a look at what's there, because there's a lot happened this year and a lot's going to happen. This has been the current federal tax developments for the week of, we're going to say here, May the 13th. For those of you here on the May, those of you looking at this, be aware, we've got all this stuff up and running. So, we've got our information at currentfederaltaxdevelopments.com. So you can go there, pick up what you want to pick up in terms of, what's going on. Keep up to date as we post developments. As I noted, I will be reposting Wolters Kluwer's developments to the Wolters Kluwer story on that site. So if you're interested in those, keep following me there. Watch for changes there. You can send me questions or comments, edzollers@currentfederaltaxdevelopments.com. I'm on Twitter at edzollers. And by the way, that's where I got a lot of information this week as the Wolters Kluwer situation unfolded. A lot of people have been working really hard there. We've been trying to keep people up because of the problem Wolters Kluwer has had communicating. We're bouncing around things that we get. So we're trying to make sure official information gets posted widely so you know what's there. So, follow that, watch it there. Also follow discussions on the subreddit, r/r/tax pros. You can also find me online at the Connect sites for New Jersey, Arizona, and Minnesota. I'm also follow along the Tax Talk site for Cal CPA. So until next week, when maybe we'll know a little bit more about what went on, but probably won't know a whole lot more about what went on. But we'll certainly have other developments occurring, so we'll take a look at those. Maybe we'll finally get the final regulations on the state tax credits and how that interacts. Maybe we'll finally get other final regulations like those that we're waiting for 199 Cap AG and cooperatives. Who knows what will come, but whatever it is, we'll hopefully talk about it with you next week as we present another week of current federal tax developments.